Well, as we said, the Federal Reserve's annual Jackson Hole Symposium kicks off today. Investors anxiously awaiting Fed Chair Jay Powell's comments on inflation and interest rates. Brian Cheung in his elements on the scene in Wyoming for us. Brian, I saw you hiking yesterday, but I know you've got a lot of work ahead of you the next few days.
Yeah, of course. Well, I'm trying to get the outfit. I don't know if I really nailed it or not in terms of Jackson Hole, Wyoming wear. But look, at the end of the day, a very serious conversation here in Jackson Hole, Wyoming among Fed policymakers over what is going to be the next step as inflation remains at paces unseen since the 1980s. I had the chance to speak with Kansas City Fed President Esther yesterday, talking specifically about the lag monetary policy effect, because we know that the Fed's already hiked in 4 consecutive meetings. When do those interest rates start to bite into inflation? Take a listen to what she told us yesterday.
We don't know exactly. I think typically we've thought about 6 to 12 months of lag in that. And of course, we saw those tighter financial conditions hit pretty quickly, mortgage rates, for example. But there are other sectors of the economy that will be digesting this movement in rates. At the same time, next month, we start the full roll-off of our balance sheet. So I think as I watch the combination of these rate hikes, a balance sheet coming down, it's going to be important to see how the economy adjusts to what the Federal Reserve is doing.
So the Kansas City Fed president actually sounding a bit cautious there, reminding everyone that despite the fact the Fed has already moved pretty expeditiously so far, as the Fed continues to hike rates, because that is what they've signaled, they still need to be careful because there is a lag effect where it could take 6 to 12 months in many cases for rate hikes that have already been put in place to actually start to affect the economy. Now, keep in mind, Kansas City Fed President Esther did dissent against the first 75 basis point move in June. She preferred a smaller half a percentage point increase. That was a surprise to many who have historically viewed her as a hawk, which just shows how volatile and how fast moving everything is happening. Of course, Fed chairman's gonna make a speech tomorrow at 10 a.m. Maybe he'll add more commentary to the situation as we get closer to that September FOMC meeting. Of course, we'll have the full coverage of that speech and all the happenings here in Wyoming, right here on Yahoo Finance. Akiko.
Brian, do you have a monitor out there? Can you see us in the studio?
I think I can, yeah, in the corner over here.
I've been told that in the spirit of Jackson Hole, I'm told I have to put my hat on. I would only do this for you, just so you know, wearing a bucket hat in a New York City studio. But we're all in the spirit of Jackson Hole here.
Akiko, this means so much to me, and especially as my fellow co-anchor here, I think it's really great that we can match here. A great late August theme here that we got going. I love this, and it's slightly lighter, but you probably could use this out there too.
I know I need my denim. Look, you mentioned what Esther said. Obviously, there's a lot of this is messaging, right? Because between what we hear from Jay Powell tomorrow and then the Fed meeting, there's still economic data coming out. There's still a long way to go. But I wonder what the mood on the ground is there. It feels like part of this is also sort of the Fed controlling the message, expectations at a time when a lot of Americans are saying, how aggressively are you willing to move? Even though inflation, at least in the latest data, shows maybe slightly peaking.
Yeah, well, in the same vein that you and I are wearing our bucket hats and trying to match, the Fed officials are trying to get their message in unison as well, because we know that it's a very kind of all over the place time in terms of financial markets. You saw actually the stock market rally and bond yields go down after the June meeting. We've seen a bit of a reversal of that over the past few weeks. The big question for the Fed is, how do they get the message clear to markets that it's not over yet? The Federal Reserve has interest rates between 2.25% and 2.5%, which is roughly the estimate of where the Fed feels like interest rates are neither stimulative nor restrictive to the economy. They want to get too restrictive in the form of further rate increases. Now, how high can they get that before they have to stop and then pause and then assess, allow that lag effect of monetary policy to bleed through? That's something that we should expect the Fed chairman to kind of set the tone for as the leader of this central bank. That's what makes tomorrow's speech so important.
Okay, well, I'll be watching really closely. Bucket hat and everything in hand. Brian Cheung, as always, appreciate it. And of course, Brian's going to be out there over the next few days. You can tune into our live coverage of the Jackson Hole Symposium. Brian Cheung, somebody speaking with Federal Reserve Bank of Cleveland President Loretta Mester. That is coming up tomorrow. You certainly don't want to miss that.